Okay, let's get straight into it. I just drew that line to align the visual recording with the screen recording. But yeah, this is just going to be a quick little, I guess, analysis video talking about the trade I took yesterday, why I took it, the narrative understanding I had, and as to why my like entry and exit were kind of as good as they were, regardless of this chop here. So I'll just leave the 1 hour and 4 hour up on the left side for reference. But yeah, so all I've got marked out here is Asia lows. Or what I was calling it was an original consolidation lows. Okay. What is an original consolidation? You're gonna have to learn your market maker models for that. But all the original consolidation to me was this. So clear original consolidation, displacement, low risk, first stage reaccumulation, second stage reaccumulation, smart money reversal, and then we're on the sell side of the curve. So buy side of the curve and sell side of the curve. Kind of start to get that. Sorry, I just ate, so I'm like still digesting, I guess. But yeah, so we had an hourly SMT off of this high here. With this hourly SMT, this means that this high is protected. And I'm just going to let you guys know I'm doing analysis at 10:05. I'm also going to be trading 10:30 news tonight on that eval, which is going to be uploaded after this one. So go watch that if you haven't already. But yeah. So buy side of the curve, sell side of the curve. Now, how do we know this is original consolidation? There's no fair value gaps within this range. Straight chop. Original consolidation. We gap here, that's our displacement, low risk inside of that gap. Look to frame your first stage reaccumulation, second stage reaccumulation, and then the smart money reversal. Very clean smart money reversal. So we have, I just need to see below, we have prominent London highs here, which wasn't actually London highs. London highs were like put in over here. But to me, this is true London high because it was the swing that got created. So we have a sweep of buy side liquidity where in premium of the current day dealing range, which is from this low, which was the intraday low, to the intraday high. So we're in premium of this range, current daily dealing range, consequent encroachment. Just make it red, makes it easy for you guys to spot. That's how I also like to have it. But yeah, so all that is consequent encroachment of this low, which is our intraday dealing range consequent encroachment. Sorry, intraday dealing range low, or yesterday's low for now. And this was our intraday dealing range high. This is just for the time in which I was looking at price, which so far is still the dealing range in which we're dealing inside of currently. But yeah, so with this understanding, I know that once we flip sides of the curve, which we had in, say, this portion here, I know that once we flip that side of the curve, this is our target, regardless. The original consolidation highs or lows are always going to get traded too. Genuinely, I'm not going to explain why. It's just how it works. The market moves in this weird algorithmic pattern that creates market maker models. It can either go like we have here, like a chop, displacement, low risk, first reaccumulate, second reaccumulate, smart money reversal, come off the high, same sort of thing, down to that level, smart money reversal off this high, then start to do the same sort of thing, okay? So that's one. The other one is slightly different, moves in just like legitimately that, which is kind of more so what we got. Like we did have one retracement, but even still. So yeah, it's just frame it however you'd like, but that's what a market maker model is. So I was sitting on the 1 minute time frame and the 15 second. And I'll just show you so I was looking at price. I started my analysis around here, and I'll just give you my thoughts from 9:30 onwards. So what did 9:30 do? We have primary buy side at the intraday dealing range, which was our liquidity sweep. We have this high here, which is our secondary BSL, which is just buy side liquidity. But yeah, I almost more so want to mark out the old high where liquidity previously was, because this newly created liquidity is an engineered high. It's pretty much all it is. But what did we have from this high? We had a 15-minute bearish SMT off the high. So this is 9:30's candle opening, trading inside of a fair value gap, trading into a liquidity pool, a buy side liquidity pool, after already sweeping buy side and then displacing to the downside, which was just a clean accumulation manipulation with a one standard. Yeah, we'll skip over accumulate manipulate here. So we have this wick. I'm just going to get rid of that. One other thing that you can do is, like, from the liquidity sweep to the smart money reversal, you can grade that range so you can see consequent encroachment gets tagged literally perfectly, but that's a bit too advanced. So yeah, we have this gap in here being respected. 1 minute down close after putting in an SMT. We have an SMT here, so that was already a protected high. This is a newly created protected high. We then have first presented fair value gap. First presented FVG, 9:30 a.m. first presented FVG. We trade. So I was looking at price in here, but I still hadn't finished my analysis. If I haven't finished my analysis, I can't take a trade. I needed more confirmation, more conviction to be able to enter. So with this understanding that this is a low resistance liquidity run condition with generated low, generated low, generated low, generated low, all this range here should be ran relatively quickly. Now, we didn't do that, but that was my understanding of what we should be doing, sort of thing. So in saying that, we have a retrace inside of first presented. We have a 1 minute rejection block. And what I actually wanted to see was this high where we have the SMT off. So where you can see the SMT there, SMT there. This high is a unfilled 5 minute gap. So I'll show you what I mean by that. Is we have this tiny little gap in here. But that's an unfilled 5 minute. On ES, which is our closely correlated pair, we have the same thing. But if you guys know what an SMT is, which you should, it means that ES actually took this high and created a protected high or a lower time frame smart money reversal, to which then we displaced. So with this SMT, 5 minute bearish SMT, inside of the unfilled where I wanted to see price deliver to, that was enough confirmation that this high wasn't going to get traded to. 9:30 first presented FEG was going to be respected. This 1 minute rejection block high should stay open. So then we have a nice order block off of this range here. From that, I pretty much just waited for a solid down close. I know we didn't invest this fair value gap, but all I was waiting for was heaviness or conviction that price was going to trade in the direction I already knew that the market should be trading to based on the original consolidation. So in doing so, I pretty much waited for a strong closure. We got that strong closure. I pressed the button immediately upon this next candle open. I think I got my fill at 212325. So like actually around 2123.5, like around there. So that was my fill, like relatively good fill. My risk, I didn't go for the rejection block high because we had this candle here. I knew this ICT order block should hold. So regardless, if we were to do anything, we would trade up into here, respect the bodies, and then continue lower. But that's also, again, a bit advanced. Once we then created this next candle, all I was doing was grading this fair value gap. Following that fair value gap, we had the 10 a.m. candle, which is this exact candle here, do the exact same. We had a 5 minute SMT, again, inside of, where is it? Here. So we had a 5 minute SMT inside of another 5 minute fair value gap. So this to me was another protected high. This is where I ended up actually pyramiding. So when I say pyramiding, I waited for like pretty much closure. And then my trailed stop was like to the high of the fair value gap and still just targeting those next lows. So yeah, even amongst all this chop, you're still able to like frame, well, using my system and the way that I trade, my knowledge, my brain, whatever, I knew that Asia lows was our draw on liquidity. So all I had to do was wait for PD arrays in relation to that narrative get respected. It was quite simple for me. All I had to do, again, legit just wait for that to occur, wait for price to show me with these protected highs. Like, it's showing you that's an entry, this is an entry, that's an entry, that's an entry, and then anything lower, which you can see it's pretty bad, is a bad entry. And what I was looking at was then the reversal. If this is our original consolidation, we now have triple relative equal highs. We had a very clean, I'm not going to go too far into it, but a very clean inversion. Could easily enter, stop below the protected low or here. Do I know if this was a protected low? No, I don't. But this was the trade I took. I hope that's helped you guys. I've now got 15 minutes to do my analysis and catch a banger off of our news or volatility injection. But yeah, stick around for that, as in watch the next video. I can link it to this one once it's uploaded. But yeah, regardless, I hope you enjoyed the analysis video. Hope you enjoyed my framework, my understanding of how to do these sorts of things. So yeah, just trade well. Keep watching my videos. I've got a new series dropping soon, and that 500 to 10K series is going to be out very, very soon, just getting AMP and everything like that sorted. So I'm pretty keen. But yeah, regardless, subscribe, turn them noties on. You'll get that next video a bit quicker. But regardless, hope you guys have had a good day. Hope you guys have enjoyed the video. And yeah, we'll leave it there. Peace.